story and talk about Gail in greater detail. Of course, this is the big story that we are tracking for the day. The news is that there is an announcement on tariffs for Gail's transmission pipeline. It has come in lower than what the street was anticipating. So the new tariff has come in at 65.69 rupees per MMBTU, which is a 12% increase from the current levels. However, it is lower. The ask from Gail was a 33% hike to 78 rupees, and the analyst community believe that maybe not around 33% hike, but there could be at least a 20% hike, which will be on the cards. And that is what everyone baked in their estimates as well. So 12% is much lower than both these parameters, which was expected by the street. However, this is just an interim relief, as the order says, and as Gail and PNGRB also told us. Regulator has not considered adjustments for future and actual operating expenditure and capital expenditure in this particular calculation that came by. They only made these calculation basis two things: the capacity and also the deallocation of APM gas that took place. Such adjustments, all of the other factors, will be taken up in 2028. That is when the next leg of revision for tariffs will come by for Gail, and the estimate is by PNGRB as well that is when they will get full benefit of a tariff hike. PNGRB also indicated they wanted to make this process very smooth and now not go at one go for tariff hike, because that will impact customers as well. What are brokerages making of this? UPS has a buy with a target price of 215 rupees a share. They say that tariff hike disappointed and increase in realized tariffs could even be lower. 12% does not increase announced tariffs does not mean the realized tariffs will be equivalent, because other costs will be taken into consideration as well. However, regulator has deferred review of other parameters from FY28, and this is something that would lead to material increase in tariff and can place unexpected financial pressure on customers. So this is something that we'll be tracking very closely. Citi has a buy. They also have a similar target price. They say this is below 15% that had built into forecast and well below 33% hike that Gail was seeking. This should now set in motion implementation of new unified tariff regime, which is material positive for IGL. Jeffrey says because of this tariff hike, they say it is largely in line. They had expected around 15%. They say they build a new tariff and raise both FY27 and FY28 estimates by 7% each. Tariff hike is in line with expectation. They have a buy rating with a target price of 230 rupees a share. So this is what the brokerage view is in terms of Gail. In fact, we spoke to PNGRB earlier today. They told us that this is just an interim relief and that tariffs will be revised in 2028 again. Listen into what they had to say and their reasoning as well on this number.
We have concluded the tariff interim in between the 5 years also. So next hike will be from 1st April 2028. So where we'll do up everything. It is clearly mentioned in the tariff order that next revision will be effective from 1st April 2028, wherein we'll all true up all the factors, capex, opex, relief, everything we will give. Two reasons for tariff revision. One is the capacity determination, which has been done by Engineers India Limited, and second is the deallocation of gas, of APM gas by the ministry. So these are the two basic reasons, and wherein we have determined the tariff of 65.69, considering all the three factors. Actual SUG we have given, future SUG we have partially given, and the capacity determination hike we have totally given. So this interim relief is in the interest of Gail.
To understand the impact further, we also spoke to Rakesh Kumar Jain, the Director of Finance at Gail, and the company, and we asked him that this has been lower than what the company was seeking. So how do they feel about it? What will be the impact? Listen to what they had to say.
We submitted our tariff of 78 rupees way back in August 24. And if you see in terms of net present value, it should have been around 81, 82 rupees. Yesterday night, PNGRB has issued tariff order, which says tariff approved as 65.69 rupees. However, it's on interim relief basis. Actually, it's not a regular tariff order they are saying. They are saying interim relief, and regular tariff order will be issued in April 28. Actually, tariff orders are normally issued in a block of 5 years, but regulation also says if there are significant change in the principles of parameter based on which the tariff was revised, we can or PNGRB can ask us to submit, or we can approach PNGRB. So in this case, PNGRB asked us to file the midterm review, and we filed it. It will increase by 1,200 crore rupees per annum based on existing volume. And next year, we are also expecting at least 8 to 10% volume hike. So therefore, it will be around 1,300 to 1,350 crore rupees per annum. Normally, whenever PNGRB processes the tariff, they moderate certain future capital expenditure and operating expenditure and true up in next revision. So we were expecting the tariff based on those revisions should be 72 rupees, but it has come down to 65 rupees, 69 rupees. There is a gap from our expectations of around 5-6 rupees. And since we are yet to go through the tariff order, we'll see what are those parameters based on which tariff has been moderated, and certainly if we feel that there are issues, we'll certainly take up suitably. We do not have any choice in terms of regulation. We have to apply the tariff approved by PNGRB on non-discriminatory basis to every customer.
We'll take a short break, but just as we do that, here's a quick programming note. If you're looking for the big bets and market themes for 2026, CNBC-TV18 Access gives you direct access to White Oak Capital AMC's Ashish Somaya and Prashant Khemka as they share their winning market themes and actionable investment strategies. You can ask your questions live today at 1:30 p.m. by becoming a member on the CNBC-TV18 app or logging on to cnbctv18.com/access/plans.